Good morning and welcome to the Daily Energy Markets podcast. It is Wednesday, May the 25th, and we're seeing Brent crude oil open in Asia this morning up. It is creeping upward. We feel and look like we've broken out of that tight band of 100 to 110 on Brent that we saw for much of the first few months of this horrible war in the Ukraine. But now in the last week or so, it feels like it's broken free. There's a new dynamic at play. What exactly is it? Let's go to CEO of XM Australia. Peter, your thoughts on that idea? We've broken out of this tight range to the upside, not dramatic, but moving slowly but surely. I suppose one of the reasons may be that China looks like it's got a heartbeat again.
Absolutely, Sean, and good morning to my fellow panelists. Greetings from Sydney. Yeah, it certainly has. It's got a heartbeat there. I'm not sure whether it will need ultimate resuscitation, but at the moment, Sean, it's looking relatively okay. The big picture theme coming out of China, but their COVID policy is one that it could run for a new number of months from here. And you've got Brent, as you mentioned, at 114. I take on board what Andy's saying. I still believe it's going to be a 120 handle. It'll be there sometime early June. I just think the overall momentum, summer driving season, that US dollar's come off a little bit, and overall structural weakness maybe for the US dollar. You might see a 101 or a 100 handle back from that 104. So I think the upside's going to be energy. Have a look at nat gas prices and the overall I think health of the market is a stronger and more robust price in the short term.
Peter, meanwhile, in China, the government came out earlier this week announcing some kind of stimulus measures, broadened tax credit rebates, postponing social security payments, loan repayments. Nothing too dramatic, but nonetheless pointing in the direction of where they would plan to go. Is that enough? Is that a damn squid? What are your thoughts on these initial soundings of China stimulus?
Well, they're very positive, Sean, from an onlooker looking in, and analysts are saying that that's a general theme that everyone's singing from. So first off, positiveness. Secondly, how long these lockdowns last for and the overall structural strength of the Chinese economy GDP wise. I noticed that Bloomberg came out last Thursday and they were saying that their bottom tail that they'll see a 2% rise, so a bandwidth from 2% forecast for GDP all the way to 5.5%. So you can imagine there's a lot of
that's a 2022.
That was for the current quarter.
Current
that's
quarter.
Where they're looking. Yeah. So they're looking as far as, and that's annualized, but they're just looking at that as far as the weakness that they've seen. Remember, put your mind back, the US outgrew China as far as GDP in the fourth quarter last year. Biden came out and mentioned that in January. So the overall picture as far as growth and how China moves forward, these particular quarters, considering the lockdown from retail sales, and you're looking at supply chains, all of the logistic work across the globe, it's going to be a tough ask. And I think they'll have to do possibly more than the $5 trillion that they've thrown at it so far. They may have to throw a little bit more. And high energy costs aren't helping the situation in China, Sean.
Peter, we do have, just sort of following on this theme, which I think is important because fractures in it start to weaken the unravel this sort of foundation on which a lot of economic outlook is sitting at the moment. We've had an Associated Press survey poll in the US overnight coming out and showing that the Americans are becoming less supportive of punishing Russia for its invasion of Ukraine if it comes at the expense of the US economy. We're only 3 months into this, and the expectation is that this grinds on harder. Europe are about to introduce a sixth phase of sanctions next week, whether it includes the EU embargo on oil or not. It's going to include a lot of other things. The appetite sustaining, your thoughts on that and its relevance for the markets?
Well, Sean, first off, building on the comments that Dr. Charles mentioned as far as the inflation curve, and the hurt on Main Street is enormous. You've only got to talk to, I've got different people that I talk to over in the States, and the cost of everything is very sky high in Australia as well. But the fuel costs over there, what they've experienced, natural gas prices, the cost as far as chicken, beef, minced beef, you name it, all the fruits, vegetables, everything is at record highs. And this is the hurt that they're experiencing. And they're all going, well, hang on, Russia's only got stronger. Have a look at the price of the ruble. What's happened there? It's gone from 135 down to what it's currently at 56. And everyone's saying, well, hang on, Russia's doing very, very well. We're being hit here as far as the pump and hurt on Main Street. When do we get a change? And with inflation galloping away, and many are still saying that 10 or 11% is very achievable, then I think it's going to be a very, very tough sell. And the overall mood over this summer period is going to be one of gloom. As we say, are we headed for a recession or something even worse, Sean, come fourth quarter in the US?
Peter, just to follow up on that, I had a pretty good interview, which is coming up after this show. We'll be posting it on Halftime Talk this week with Amrita Sen. And she made the point that Asia is about 18 months behind the sort of Western, with the West, and coming out of the COVID, sort of the economic bump up that we saw, that pent up demand. And they're forecasting that the next 18 months in Asia could be a lot of a release of this pent up demand, and be quite supportive to all things energy consumption, and particularly in mobility.
Sure, I absolutely agree, Sean. And I think as long as you don't have further lockdowns, and if that, I mean, that's the throw of a dice, a roll of the dice. If we return to the status quo, then I think Asia is going to perform very, very well over the, as you said, over the next 18 months leading up to end of 23. But the issue is how heavily or problematic is the global inflation situation. And there are many Asian countries under the whip, you know, Malaysia and Indonesia and Thailand. We've got teams over there, and I talk to them, they're hurt on the street that they're feeling also. So it's not just isolated in the US or Europe with 9% or the UK. It's really a major concern across the globe, this inflation spike, and how it's going to be managed and how it unwinds. And if you listen to Lloyd Blankfein, it could be very, very messy.
And all of the central bank governors are certainly talking the talk. Lagarde jumped on the bandwagon earlier this week saying, we're going to do what it takes, that famous line from the former ECB central bank governor. Peter, your closing thoughts. It strikes me, I mean, where do you stand? And we have one of our regular weekly commentators, Omar Najia, who doesn't believe the central bank monetary policy makers has the stomach for the sort of Volcker type scale of challenge here. Your thoughts on that? Will do what it takes.
Well, I think, Sean, first off, let's see what they are, you know, June and July, and if they are already baked in, and everyone says they are at 50 basis points each month. So there's the first thing. I want to see how their mood is come September. I want to also appreciate Dr. Charles's mention as far as the hurt on Main Street that you're experiencing in the UK, and that will be rolled across to US. The companies that can't afford a pay rise, and they're not a Microsoft. So there's a lot of people falling into that basket, and we're talking possibly tens of millions. So the hurt is going to, I think, with high food costs, high energy costs, and the only good fortune at the moment is that you're really into a Northern Hemisphere summer. So you're not trying to heat houses as much as what you will be in 6 months' time. I just want to see where we are as far as US dollar, where we are with energy over that end of that summer driving season and rolling into September, Sean. It's going to be that volatile. I wouldn't be surprised to see the NASDAQ wipe off another 10 or 15%.
We'll wrap it up there. Peter McGuire, as always, awesome in Sydney. Andy Lavin in Dubai, telling us all as it is and with great insights, and Dr. Charles Elinas from Cyprus and Holland, a nice bridge of two places to be based out of. Thank you, Dr. Charles, for your insights as always. And we'll catch up every morning, 10:30. We see Brent trading up this morning, as said, about $1, about 1%, holding firmly above 114. Will it get to the 120 handle by June 1st, as indicated by Peter? We will see. It's certainly moving in that direction. All the best. Thank you very much.
Thank you
Thank
very
you,
much.
Sean. Thank you, Dr. Charles. Bye, Andy.
Bye bye.